Hi, thanks so much for joining in. You're watching BQ Prime, and my name is Alex Matthew. This is an earnings conversation about a company that is benefiting very significantly from the growth of the investor base here in India. In the quarter gone by, Anand Rathi Private Wealth has generated a revenue growth of 37% on a year-on-year basis and a PAT growth of over 35%, or just about 35%. To talk about this in more detail, and the way forward, I've got the company's Deputy Chief Executive Officer, Feroze Azeez, joining in. Feroze, thanks so much for taking the time, as always. You keep insisting on the fact that the company is set to grow at between 20 to 25% over the long term, but then you have consistently beaten that. I think over the last 5 or 6 quarters, every time I've spoken to you, I've asked you whether you're raising your estimates higher. I'm going to ask you yet again.
Yes. Hi, Alex. Yes, consistently, we've beaten that number between 20 and 25% because of some degree of kindness from God, and also the fact that we are on a smaller base. So the long-term expectation, when we say the 10, 15-year, 20-year periods, this kind of compounded growth in key variables are possible, especially the PAT. We really mean it. But these 30, 35s are an outcome of some degree of extra you get over the formative years of the business, which we are in, point one. Point two, I think from a guidance standpoint, this quarter, we are upping the guidance. We had given a PAT guidance of 205 for the year. And if we finished 111 for the first 6 months, so we are upping our guidance from 205 to 220. And we are upping the revenue guidance to 720. If I remember right, it was 666. And we are upping our AUM guidance because we have finished the full year AUM number already. We had said 47,000 crores as a consolidated number on all subsidiaries put together. We are already close to 48,000. So we are upping that to 51,000 for the full financial year.
Okay, so that kind of gives me a sense of how the second half is likely to pan out, all things considered, all things remaining equal at this juncture. I'm trying to also gauge how your investors are behaving, because I look at the last SIP number as a whole for the industry into mutual funds, and I think you facilitate a lot of those investments for your clients as well. We're at over 16,000 crore rupees for the SIP book, which is quite sticky. And I think to a certain extent, you're also seeing increased interest in deploying funds into equity mutual funds, because for your AUM as a whole, it's now 50% of the book. How would you justify or how do you describe what your clients have been doing in this last quarter?
Yes, Alex, this will take a little dissecting of the numbers. Let me get into it. From an industry standpoint, of course, the number for the last month, which is September, was 16,420. For the full year, the average has been above 15,000. From April, where we started close to 15,000, we are at 16,000. The average, if you assume 15,000 crores a month, gross SIP has brought in 90,000 crores into equity mutual funds. But the sad part is that the total net mobilization is only 60,000 crores, which implies SIP brought in 90,000, and the lump sum investments were negative, approximately 30,000. I'm oversimplifying it. So lump sum investments have not been very, very heartening for the 6-month period as an industry standpoint. But our numbers, we are reasonably happy. We've done about 1,800 crores of net mobilization in the 6-month period. So that makes it a market share of 3.1%, including SIP. SIP is something which we have not been focusing on in the past because that has been perceived to be a retail instrument. But now in the next 3-4 years, we're going to up our SIP number. So 1,800 crores, largely lump sum monies from Anand Rathi Wealth in an industry which was minus 30,000 crores in the same period. So that helps us believe that the professional aspiration we so have, that we want to be industry's 3 to 4% market share in AUM over the next 4-5 years, seems likely. And India is going to go through a huge multi-year or multi-decade paradigm shift between financial instruments. Alex, this is one number which really perplexed me. There is 670 lakh crores, as per RBI's data, give or take, as household savings, 670 lakh crores. And only 4% of that is in equity mutual fund. we have as a country more money in savings account and currency than we have in equity mutual. If this is not evidence that we will have so much more coming into equity mutual funds, and if our aspiration is to be 4% of that, which we are just 1.25 today, we're working and we'll do our best to see if we can achieve this.
Okay. So as you pointed out, a lot of your clients deploy money through that lump sum route. And I'm actually curious because a few indicators, this is not necessarily related to your earnings, but considering that you deal with these individuals, with these families, I'm just trying to get a sense of it. We've seen real estate or a lot of interest in real estate of late because of the quarterly updates. And generally, I think over the past, you've seen instances where when there are significant rewards or returns in the equity markets, people tend to book large lump sum amounts and then shift it into other asset classes. Is that something that your clients are talking to you about? Are you seeing evidence of this taking place?
No, Alex, because if we, as a professional, if we throw the right data for prudent decision making of the investor is going to take decisions on the basis of mathematics. Now, for example, we audit several properties which are there as a part of our clients' portfolios. Our 9,200 families have close to 35,000 crores of real estate. That's a lot of data you're sitting on. So we try and check what is the compounded return of all these properties. And the last 1,000 crores which we audited, the IRRs made by the client is 8.5%. Okay, clients don't calculate real estate IRR. That's why they lap up an opportunity if there's a great brochure from a builder. But if they actually went to calculate the IRR of the house they lived in, then they would know as a comparison. So we don't see a shift in the asset class because we've audited. Secondly, I think people have this tendency of giving real estate 10, 15, 20 years, gold eternally. But they want to make money in an equity in 3 years, 2 years. That's not fair. You have to treat all assets equally. When we get our clients invested, we tell them that every year market falls 15%. If you're not mentally prepared for that, I am not prepared to take your check.
You have crossed that 9,000 mark. I'm not sure in this quarter, but you are at 9,200 or thereabouts for clients. And it has grown in double digits this time as well, 16%. What is your anticipation, or if you have any goals that you would like to share in terms of that number? Is that relevant at all, or is client spend more important, or investment number more important?
Both are equally important. The clients who come today are going to be my growth drivers 2 years from now. Because in a business which is driven on trust, it's very important for them to actually dip their feet in water. And then over the next couple of years, when they see consistency between what is being said and what is being delivered, then they give me more wallet share. So all clients who come in this year, I would see them as my revenue drivers and growth drivers 2 years from now. So both are important. But the clients who came in 2 years back are contributing significantly to our revenue. Because when we see the trend, as time progresses, the client's wallet keeps getting more and more with us. So if you look at 10-year plus clients who've been with us, they contribute significant portion of their assets being managed by us. So both are important. You're so right. We crossed 9,000 this quarter, actually.
Okay, Feroze, but how would you describe the vintage of those clients? You mentioned that you have some very long old clients. And I think in past conversations, you've mentioned also that you have metrics to describe the stickiness of clients with you.
Yes. So what we do is we also check clients' attrition. Now, for example, attrition 0.21%. Which was a reduction from 0.36 same quarter last year. Any client who comes down to zero assets, we count that the client has left us, and that's 0.21. And there's no reason why we should still not take that 0.21 seriously. We still do take that 0.21 seriously. Coming back to when you look at what is the matrix in which we categorize vintage, I think 10-year plus is an important category, which we not just measure in terms of how much they help us make. As a business, we also try and measure how much they made with us. So I'm very happy. I'm just on a casual note. I'm telling you, the 10-year plus clients approximately made compounded return of 13.97 with us for 10 years. And that's what gives us the maximum happiness. It's not about how much we manage. It's about how we manage, which we are very passionate about.
And I would assume, so that's a blend of multiple asset classes, not just equity, because equity has just now become 50% of your book, right?
Yes, sir. It's the overall portfolio.
Fantastic. All right. So, Feroze, as always, pleasure speaking with you, and congratulations on another set of great numbers. Look forward to the next quarter.